Hey guys, welcome back to the channel. Michael Garcia, I See Life. Today, we're going to be talking about life insurance for your kids. Now, I do get this all the time. A lot of people ask me, hey, what kind of life insurance is best for my kids? And really, the honest answer just depends on what is your budget, right? What are you trying to accomplish? Do you have the means to accomplish, right? And so what I want to show you today is actually one of the most powerful life insurance strategies for kids. And what we're going to do is we're going to show you how to not just cover them death benefit, how to grow money for them, but then also how to insure, a portion or even all of their retirement with just a little bit of money, right? It's actually less than $100, and you can make sure that your kids have a ton of money in their future to protect against if they get injured, any kind of permanent disability. They're going to have money when they turn 65, right? And so that's really something that most life insurance policies don't do. But if you have the right type of policies and you have the right riders, you can actually insure against disability too, not just them passing away. Not to mention all the benefits of a whole life, all the benefits of the cash value, the tax advantage growth, right? The access to that money so they can leverage it, so they can control their financing when they get into their 20s, 30s, and start to build a financial future, right? So let's just get right into it, right? I'm going to show you a policy. And this is through a company called Mass Mutual. And so this is an example of a policy that I did. You're going to look here. This is a pay to 65. If you look here at the top corner, the premiums go to age 65. And what I want you to see, there's a couple different charges here, right? So you got your base premium right here, and that's $63 a month. That's what this policy costs, right? So we also have the guaranteed insurability rider. That's another $642 a month. And then you have the waiver of premium, and you can see right here, that's another $6.11. So you have this grand total here of $76.04 a month, which is pretty good considering the advantages that you're going to get, right? So let's talk about why these riders are so important. So if we go to the next page here of the illustration, you're going to see guaranteed insurability rider of $125,000. Okay, so what this rider does is the rider provides for the right to purchase life insurance without evidence of insurability in limited amounts over time. So what that means is there's going to be option dates in the future that are going to allow you to actually purchase additional policies. And it doesn't matter if the person gets sick, doesn't matter if they become disabled, they don't need to prove their insurability in the future. So that's a big deal. And then what we're going to compare that with is the waiver of premium, right? So that waiver of premium, I'm going to actually show you in the next couple screens here that there's actually two separate charges in that waiver of premium. But what that does is right here, premiums are payable to age 65 or the end of the premium paying period of the policy if earlier. And the reason if earlier is there are options to pay this only over 10 years, over 12, 20 years. So there's some different payment options. Some people want to just pay it right away, maybe put $300 a month for 10 years and then have it paid off. They're done. But this is to pay age 65, okay? So right here, we're going to talk about the guaranteed insurability rider. The rider benefit, while this rider is in full force, new insurance may be purchased during each option period. This new insurance may be either a new policy or an increase in the face amount of this policy, right? In either case, evidence of insurability will not be required, okay? And so if you look down here, what are the option periods? You can see the policy anniversary dates on which the insureds attain age is 25, 28, 31, 34, 37, 40, 43, and 46. So every 3 years, this child is going to have the option to purchase additional life insurance in the amount of $125,000. So if you have $125,000 and you have these option dates, right? If you count them up, that's 8 option dates, 5 right there and 3 here. Multiply that 125 by 8, that's $1 million of life insurance without having to prove insurability. So that's a lot of life insurance, right? And if you know anything about whole life insurance and all that premium that goes into it, you also know that that's going to build up a lot of cash value, okay? Now, let's talk about the waiver of premium, right? So I want you to see, this is an actual policy from a client of mine. And you can see this is the guaranteed insurability rider. And you can see the premium. The annual premium is only $98 a month. You break that down, just like the illustration showed, it's less than $10 a month, okay? So, and then if you look down here, there is a waiver of premium, and that's $107 a year, and that's payable. Remember, this particular policy is actually a 10-pay policy, so this one is only payable for 10 years, right? After that, it is paid up, and you are good to go. So even though the option dates are still in the future, you don't have to worry about continuing to make those premiums. So, and you can see the option dates right here too, right? You can see every October, which is the anniversary date, starting in 2041, this child's going to have an opportunity to purchase more life insurance, okay? Now, I want you to see the difference here because this is important, right? The initial face amount is $100,000. And what I want you to notice, this is the same exact policy. The waiver of premium, there's a separate waiver of premium charge of $19. And that waiver of premium charge is specifically for that initial policy, right? That other waiver of premium charge actually covers those option dates, right? So what that means is, let's say you have a 20-year-old that, you know, gets in a car accident, wreck, right? Permanently disabled, is not going to qualify for life insurance, is not going to be able to work. Well, guess what? That waiver of premium actually covers those option dates, and you're going to be able to open those policies, and those premiums are going to be paid by Mass Mutual in this case, right? By the insurer. So why is that a big deal? Because those policies add up. I'm going to show you what the initial policy looks like as it grows over time. And I'm going to show you also what it looks like with all the increases or the additional policies. And what you're going to see is there's a massive amount of money at age 65. So if we look up here, right, this is going to break down all the charges. And what I want you to notice here is you have your guaranteed insurability rider, you have your regular waiver, and then you have your guaranteed insurability waiver of premium, right? So those are completely separate charges. You can see over here that first waiver of premium is $1.65 a month. The second waiver of premium to cover those other policies or option dates, that's only $4.46 a month. And so you can see here, that's $10.88 a month, bringing your total premium to just $76 a month. And what I want you to see here is just the value of what you can get for just $76 a month. Not only can you start to build a financial foundation that we teach on this channel, you know, for your kids, right? Giving them the life insurance, giving them tax advantage, money, compound interest, something that they can leverage, an asset that they can use as they age. But you're also ensuring their retirement, in a sense, by making sure that those additional policies are available, right? So this is what it looks like here. You can notice the $76 a month. Well, that comes out to an annual premium of $912. You can see that here. Right here you have the guaranteed cash value. Over here you have the total cash value. Now that's going to include the dividends. There's two parts to this, right? There's a guaranteed interest rate for every whole life insurance policy. And then for the participating whole life policies, there is a dividend that also gets paid in addition to that guaranteed interest rate, right? Now, dividends can fluctuate. Dividends are not guaranteed. But what I can tell you is when you look back at all the life insurance companies, it doesn't matter if it's Mass Mutual, New York Life, Northwestern Mutual, Guardian, One America, Lafayette, like all these companies have paid a dividend every single year for over 100 years, right? Some of these companies way back, even like the 1850s and 60s, okay? So even though it's not a guaranteed, I would say it's a pretty safe bet, okay? It's a pretty safe bet. So, and besides, if for whatever reason, one of these companies did have financial struggles and they were not able to continue to pay a dividend, we would simply, in a lot of cases, change the policy, right, to another company that could pay the dividend. So if you look here, here's the initial death benefit. You can see the $100,000, but what I want you to notice is every year that death benefit is growing, just like the cash value is growing, right? And the reason for that is because every year as that dividend gets paid up or gets paid, in this particular policy, it is actually buying additional, what's called paid up additions, additional insurance, which also builds cash value and the death benefit both, okay? So let's fast forward to age 65. And what I want you to see, that guaranteed cash value, total cash value. So guaranteed cash value here, age 65, we're looking at $55,000. Remember, this policy costs $76 a month. Your expected or projected cash value, when you include the dividends, looks like it compounds to about $222,000. And that also gives you a death benefit just under $400,000, right? About $399,000 of death benefit. And this is money that's going to continue to compound, right? This is just that $76 a month, getting you a policy and that policy and that money going to work for you, okay? But the real magic is the guaranteed insurability option rider. And so what I want to do now is go ahead and show you. Let's skip a couple pages here. This next illustration or part of the illustration is actually going to show you what it looks like with the increases included, right? And so you're going to see over here, I put the increases, and you can see I put a star every time that premium increased. The reason that premium increased, why? Because that death benefit increased, right? You can see it goes from 122 to 250. That's that additional $125,000 of life insurance being purchased at that option date, right? So you can see the premium does jump from $912 to $2,500. You can see every 3 years we're exercising our option to purchase the additional insurance, right? So you can see it jump there to $4,100, $6,100, $8,400, $11,000, and if we fast forward a couple more option dates here, it's going to jump up to 14, 17, and 21. Should we exercise those options? Now, remember, this is where I said that option paired with that waiver of premium is so important, because if your son or daughter, let's say they have this policy and something happens, right? They get in an accident, you know, they're in their early 20s, let's just say 22 years of age, they get in an accident, they're permanently disabled, they're never going to work, right? This policy is actually, that waiver of premium rider is going to kick in, and those premiums are going to be covered for you. And when those premiums happen, it does not interfere with the cash value, right? It's still going to earn all the interest and dividends that you would earn if you were paying it out of pocket. So it doesn't have any effect on the growth of the policy. And what I want you to see here, remember, this was a $76 a month policy, and something happens, and look at age 65. Down here, we're at age 65. And if we look at that total cash value, you're giving your kids $1.3 million of cash value. Now that's what I would call, by the way, a $2.3 million death benefit, right? Now that's what I would call looking out for your kids, right? Because for $76 a month, you essentially insured a good chunk of their retirement, if not all of it, right? Because what if they never worked? And these premiums are paid until age 65, and you can see at age 65, that's the cash value that you have, right? And then after that, remember, this was a pay to 65 up here. What does that mean? These premiums, there's no more premiums due after age 65. This is all paid up. So even if you look here, 0 premium, right? But if we look at the compounding of the policy, let's fast forward to age 85 right here. Let's look over. That's $3.7 million of cash value that you can access, right? This is tax advantage money that you can actually access without taxes. And you have a $4.5 million death benefit at that point, right? Now, this is, again, obviously, we never hope that our kids would become disabled or anything horrible like that would happen. But this is the kind of coverage that you are getting for your kid, just in case, right? And remember, nothing bad has to happen for them to use the original policy or to purchase on their own the additional policies, right? This is just something that would take effect, right? They would have this money if something were to happen. And so that's why, like, I look at this in my opinion, this is like the Cadillac of life insurance for kids, right? This is your whole life. This is Mass Mutual. There's nothing better than this, okay? Now, there are other types of policies. Maybe budget is an issue, right? Because even at $76 a month, if you have 10 kids, that can add up pretty quick, right? And not to mention you're feeding 10 kids. So I understand not everybody is ready for this. Not everybody can have the same payment options, but there are other options for you to add them to your insurance and have what's called a children's rider that can then convert into their own policy in the future. There's also smaller type policies that would just provide mostly a death benefit, not a lot of growth, not this kind of protection like this, but there are other options for your kids as well. Not to mention, different types of savings accounts that we can talk about. But this right here, this is, when I talk about life insurance being a foundation, this is a foundation right here, right? This is going to protect them, and it's going to make sure that, hey, we're not just insuring against death, we're insuring against disability too, and making sure that money is going to be there in the future. And so to do something like this for your kids for $76 a month, to me, it's just a no-brainer, right? I only have one, makes sense for me. And if you can't afford it, hey, if you got four, hey, it's $300. I think it's worth it, And so anyways, this is something I really wanted to share. This is a very powerful policy with the right riders. It's so important to have the right company though, because not every company's waiver of premium is gonna cover the guaranteed insurability options, right? So you gotta make sure you're with the right company. Is this the cheapest policy? No, it's not, right? We can look at other options that might fit your budget a little better. If you're interested, just reach out. Let's have a conversation. We've helped kids with policies anywhere from, just to start out, $35, $40 a month. And then obviously this is a little bit higher. And then we've helped people with some high-end policies where, they're dumping in a little bit of money for their kids, just making sure they have a great future. And guess what? They all include the same riders, because I typically, if we're putting money into something, I'm not gonna let them not pay a few extra bucks to make sure they have this kind of coverage. So any questions, reach out. You can email me, michaelanthony@iclife.net. You can text me, right? 949-421-7935. I'm here to answer all your questions. Don't hesitate, and I'll see you next time.